Welcome back to Rockstock Channel. It is Thursday, January 30th, and we are back with an update with Sayona Mining CEO Lucas Dow. A lot has happened at Sayona since our September site visit video, namely its announced merger of equals with Piedmont Lithium and some stellar drill results at both North American Lithium and Moblan following an extensive drill campaign last year financed with flow-through funding. We will get into all of that after discussing Sayona's quarterly results just announced this morning. For disclosure purposes, you should know that Rodney and I are not strategic advisors to nor hold equity interests in Sayona Mining, but have been advisors to and invested in Piedmont Lithium for many years. And Sayona has commissioned us to prepare this video to help educate their nearly 50,000 retail shareholders, as well as the broader lithium industry, about developments at the company and its operations. As a reminder, Rodney and I are not financial advisors. This video is for information purposes only, and nothing said here should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Note that a written summary of this interview will be published in the next edition of RK Equity's Lithium Ion Bull. Please register your email at rkequity.com if you'd like to receive this newsletter directly to your email box. And finally, please make sure to like this video, subscribe to Rockstock Channel, and leave a question or comment below. As always, I'll introduce Sayona Mining with a brief synopsis and some key company attributes. Sayona trades on the Australian Stock Exchange, ticker symbol SYA. It also trades on the OTC SYXAF. Current share price is about 2.3 Australian cents, which is down 11% from the 2.6 cents when we last recorded in September, and down 28% from the 3.2 cent equity raise it did in November in connection with the merger. Sayona's current market cap is about 265 million Australian dollars or 160 million US. The company had 110 million Aussie in the bank at the end of December and zero debt. Sayona has sell-side analyst coverage from Petra's Andrew Harrington, as well as Canaccord, Macquarie, Desjardins, and Clarksons. If you'd like to receive any of this research, please email us at rockstockchannel@rkequity.com and we can connect you to the company. You could also follow Sayona on X at Sayona Mining and on their website, sayonamining.com.au. And with that intro, welcome back, Lucas, to Rockstock Channel. Happy Australia Day and Happy Lunar New Year.
Thanks, Howard, and great to be back with you and Rodney.
We've looked through the results. It looks as if you're doing well with the amount of what's going through and being milled, spodumene concentrate production, the utilization rates and recovery rates, which is high in the upper 60s. But looking against that backdrop, you have had a drop in costs, but how much more cost reduction do you think is possible at North American Lithium?
Yeah, Rodney, great question. Obviously, we've had another strong quarter, just in the order of 51,000 tonnes of spodumene concentrate produced for the quarter. As you'd mentioned, recovery bumped up 1% to around 68%, and mill utilisation is running at sort of 90%. So we maintain that strength on underlying performance rolling through. Consequence of that has meant that our unit operating costs on a tonne sold basis is down 6% quarter on quarter. We expect that there's a little bit more for us to be able to squeeze out as we move into quarter 3 and quarter 4 of this year. A couple of consequences that will be the ability to be able to get a little bit more through the mill. We're expecting also to be able to maintain those recoveries, and also some cost out opportunities that we're seeing as well on the mining and also processing side of things, and importantly on the freight side of things, which we'd flagged earlier. So those elements are starting to come to fruition. I think importantly, NAL is getting pretty close to operating cash flow break even, which is a significant improvement. And really what it means is we won't be burning cash as we move forward. So, another solid set of results. And, positions us nicely to come home with a wet sail for quarter 3 and quarter 4 of this financial year.
And just to get a better sense, Lucas, what is NAL targeting for production volumes for 2025?
Yeah, so we've been out with guidance, which is unchanged, of 190,000 to 210,000 think a year to date we're sitting around 103,000 tonnes. So again, we expect to have a strong quarter 3 and quarter 4. Albeit we've had a pretty tough winter to date, so we'll just have to see how that rolls through. But we think we're in a good position to be able to maintain the focus around both our mining rates, which were up last quarter as well, but importantly through the mill in terms of both utilisation and continued throughput, and the recovery rate sitting around that sort of 68%. So we think we're well positioned to be able to deliver on quarter 3 and quarter 4 results.
Okay, excellent. So all on track. And then I looked in the commentary and saw if you exclude inventory movements, your operating cost per ton is around about $700 US. Do you have an all-in sustaining cost estimate for us?
Yeah, so you've absolutely nailed it. So we're sitting in that ballpark on a unit operating cost basis, on a production basis, excluding any inventory movements. Our capital guidance for this year is sitting around 20 million Aussie. That's unchanged. So that'll be about just over $12 million US. So you're looking at around about another $60 a ton on top of the that operating cost that we flagged earlier. So I think that's a pretty reasonable approximation of what our all-in sustaining costs look like.
Okay, that's good to know. And if you look at the CME lithium hydroxide futures, it's in quite a strong contango. The sort of, as one goes out, it's pretty steep. It's certainly well above carry or cost of carry and interest. So there's definitely a sort of uptick in prices embedded in that. Have you locked in some of your forward spodumene concentrate sales to these higher prices that's effectively embedded in those?
Yeah, Rodney, you're absolutely right. So we're seeing the forward curve sitting somewhere around about sort of 25% in places above what spot prices are. And so we've engaged in a limited forward sales process that will allow us to lock in some of those prices as well moving forward, which obviously provides protection around downside, but also locks in some of those. And I think as we've said previously, our key focus at NAL is to get ourselves in an operating cash flow neutral position or better, and importantly be able to get through this lower price environment. So when the market turns, we'll be there and nicely leveraged to the recovery in spodumene price.
Okay, great. And then, one of the things that's been mooted around is whether or not there'll be some downstream initiatives in Quebec and Canada in general. Have you seen any of those stepping forward and becoming then potentially new sales avenue for your spodumene?
Yeah, I think one of the important things, Rodney, and I expect Howard will probably touch on a little bit, with the merger with Piedmont, it really cleans up that offtake agreement and makes it sort of quite clear around opportunities that we might have around offtake, and whether that's providing offtake into downstream processing in Quebec or into the US or into other locations, even Europe. So they're elements that we're progressing at present. We've certainly seen in recent times a little bit more activity occurring within Quebec and thoughts around that downstream processing capacity. We've been engaged with Investment Quebec, and there's discussions around that sort of hub and spoke model, which would sit well with us. We've made it very clear that we see our strengths lying upstream around the development and the operation of hard rock spodumene mines. We'd certainly be interested in participating downstream in a minority capacity, but ultimately we need someone with technical capability in that space, and also recognising that it's a significant capital investment. So we're certainly engaging with folks. We'd love to be able to knock out that freight component from our existing cost of sales. So it's an area that we're focused on. But again, our primary objective is to really be excellent around the extraction and production of spodumene, and then see how we can fit into any of that downstream capacity that might be built out in Quebec or North America.
And just going back to North American Lithium, you've used some of your flow-through share funding, which you have to put back in the ground, you've used to drill at the project. And if you look at your previous but most recent update on mineral resource estimates, you're just under 90 million tons. Can you talk a bit about some of the assay results and that you've recently had from the drilling campaign at North American Lithium and what that means for your mine life?
Yeah, thanks, Rodney. Yeah, so we've actually expended all of the flow through share funding, so that's all run off. There's some invoicing that'll carry into the next quarter, but essentially the work's been undertaken, and that's really just a question of cash flow. Importantly, we've been able to conclude drilling at an NAL in excess of 50,000 metres was drilled in 2024. As we'd flagged previously, the MRE, the last update, had just a touch over 88 million tonnes of resource. In short, what that's meant is ostensibly near a doubling of the mine life for NAL. Importantly, with this additional drilling that we've just completed in the lead up to Christmas, we've also seen some lovely intercepts, identification of new pegmatite with an intercept of sort of 40 metres at good grades. And then we've seen other intercepts within the existing MRE shell that have been sort of width of 20 metres and so on. So we're really starting to see NAL's full potential come to the fore. And we're very much looking forward to being able to provide an updated MRE later in the year that'll, I think, continue to demonstrate the class of NAL as a deposit and the opportunities that we've got around potential expansions.
And again, you've done further drilling at Moblan. You've got some outstanding drill results I think you're waiting for. The MRE there is JORC compliant, I think is around 93 million tonnes. I mean, would you say it's safe to say that it's likely to climb over 100 million with the latest drilling?
Rodney, I wouldn't like to speculate with it, but again, we've completed the 76,000 metres drilled during calendar year 24 at Moblan, and again, we've seen some lovely intercepts there as well. So again, and grades up to sort of 1.99%. So again, Moblan just continues to surprise on the upside, and obviously we're very keen to see the geologists get that modelled, get all the assay results back in, and then have an updated MRE. And as we flagged previously, on the basis of that, we're inclined to take another lap at the DFS because we expect that Moblan on an updated MRE will be able to support a much larger production base than we contemplated in the previous DFS. So, a hugely successful set of drilling campaigns at both NAL and Moblan. And we're just going to work those once we've received those assays in totality. We'll work those into the model, and then we'll be out with an updated MRE later in the year.
Okay, so that's roughly the timing. And then I know it's not a massive focus, but there was a little bit of commentary, and it'd be interesting to know your take on it. Is if you could give us a quick update on the Morella JV and the Tabba project.
Yeah, thanks, Rodney. So it's fair to say the focus has been very much on NAL and Moblan. We've got modest programs in conjunction with our JV with Morella, and it's had some modest success in the very early days in those programs. That work will continue. Tabba, unfortunately, we were rained out at the back end of last quarter, so we expect once we get a dry run at it, we'll be back into Tabba as well. So modest programs there. Certainly prospective, some interesting results coming from the work with Morella, and Tabba is an area that we're keen to get back into and see what we might be able to eke out of that lease.
Great. So if we can move on to probably something that Howard will touch into more deeply, but the proposed merger of roughly equals with yourself and Piedmont. You mentioned you expect to receive shareholder approval in the first half of this year. How is that process progressing?
Yeah, so things are progressing along nicely. Given that for those investors that aren't familiar, as you mentioned, the merger is effectively a contemplation, a merger of equals. Sayona will be the surviving entity, albeit we'll be rebranding. We'll primary listing on the ASX and a secondary listing on the NASDAQ. That obviously necessitates the filing of F4 with the SEC and moving through those processes. So we're moving through all those processes. Nothing's presenting as a red flag or an impediment to us completing the transaction in the first half. It's very much a case of getting those forms and the relevant elements lodged with the respective jurisdictions, given that obviously we're dealing with Australian on the ASX, US with NASDAQ, and then obviously given our operations are in Canada and Quebec, there's some work there as well. So it's certainly been an area that has taken quite a bit of work and coordination, but everything's on track, and we're looking forward to being able to take the merger to vote at EGMs for both Piedmont and Sayona.
And there's a conditional placement envisaged with Resource Capital, RCF, of around $69 million once the merged entity is approved. If you can just give us an outline of what the terms are of that proposed raise.
Yeah, so great to have RCF come on board. So they're really one of the cornerstone investor of the transaction. One of the key things that both our boards wanted to ensure was that MergeCo is adequately capitalised at completion. And RCF, we're in there with it, 69 million Australian at completion. We raised at 3.2 cents. So that's somewhat, obviously, we're trading at somewhat of a discount at the moment, but we're certainly looking forward to being able to close the deal with Piedmont and then have RCF join the register. So, which is going to set us up nicely to be able to not only move through this low price environment, but more importantly, or as importantly, drive projects along in terms of NAL, Moblan, Ewoyaa, and then obviously on the Piedmont side, there's the Carolina project as well. So, we're very excited about having RCF come on board. And also, I must say, more broadly, the quality of the investors and the institutions that came on board as part of the unconditional raise that occurred at announcement. So, we're very happy to see the book build there and also how that's playing out more broadly in terms of sort of the investor base.
So as far as cash goes, Lucas, at the quarter end, there was about 110 million in Aussie, up 6 million from the previous quarter because you had, thanks to that 38 million raise, less the commitments. It seems your flow-through share spend commitments have been completed. There might be a small thing with timing of the last payments, but are there any meaningful capex requirements or other large expenditures that are coming up in the next while?
No, so as I mentioned at the top of the call, our capital guidance for the full year remains intact. So there's nothing, there's no big lumps in that space. As you described, we've got 110 million at bank with that 38 million inflow. Outflows obviously flow through share funding, and again, for those investors that are unfamiliar, that was a use it or lose it, and it was dedicated to exploration work. That's been expended. There's a little bit of carryover in terms of outgoings that will occur. The work's been undertaken, but the outgoings will occur in the next quarter. And then obviously there's transaction costs around legal fees, tax advisors, and so forth that we've incurred during the period as well. So at a headline, it's probably more important to be able to sort of dive down. But I think importantly, on an operating cash basis, NAL had a strong quarter and we're very close to break even in that space. So we're very encouraged about what NAL is doing, and we look to really be able to make every post a winner in quarter 3 and quarter 4 on that same vein.
So it just, if I can sum up on my side, on the operational side, is if spodumene concentrate prices remain at current levels or higher, and the merger goes through and you get the RCF capital, then your balance sheet looks pretty solid because you are close to operational break-even without any major commitments. Is that a fair summary?
Yeah, absolutely right, Rodney. So the drains, if you like, on our cash at that point would be our corporate costs, and obviously we'll be collapsing our costs with those at Piedmont. So we expect to be able to drag out somewhere in the order of $15 to $20 million of annual synergies. In addition to that, really the only other costs are holding costs associated with the likes of Ewoyaa, Carolina, and Moblan projects, which we've in the investor presentation that we used at the announcement of the transaction, we described as sort of an indicative use of funds and how those proceeds would be deployed. We're working through sort of, if you like, what the batting order is for those projects, and that'll be one of the first things for the MergeCo board. But at a headline, we'll have a strong balance sheet, no debt, and really be well positioned to be able to get through this low price environment while simultaneously being able to push these projects along in a meaningful manner.
Okay, great. Howard?
I was thinking the MergeCo forward cash should be about $200 million because Piedmont has a fair bit of cash on his balance sheet. Is that correct?
Yeah, that's right, Howard. So yeah, we're going to be nicely capitalised.
Yeah, and if I remember correctly, that should give you at least a 2-year runway, if not longer, if prices are, at around where they are now. And by the way, prices are a decent bit higher than when you announced the merger, but your stock is 28% lower, and Resource Capital's 3.2 subscription is 39% higher than the current price. So like, you may merge sometime in the first half, right? There's a disconnect. I was looking at that, like Arcadium was trading at a huge discount to Rio Tinto's cash bid.
Yes.
In December, and then it closed very rapidly as the market. Do you think that the market is pricing in some expectation that maybe the merger doesn't go through, or what do you think accounts for this big disconnect?
Yeah, Howard, great question. Look, I think the Arcadium and Rio Tinto deal was somewhat instructive because, I was sort of scratching my head a little bit around the arbitrage that had existed there, and it's a similar thing sort of playing out with us. I expect that's going to tighten up as we get to completion. I think, there's probably still a little bit of overhang for the sector more broadly around lithium, and people are looking to say, right, if I want to get the stock, I might pick it up once the transaction's completed. So, look, I think at this point, in talking with RCF, they're in it for the long term. So, really for us is just to get through these mechanical activities associated with the transaction to get it to completion, get to the shareholder vote. Obviously, it's important that we explain to shareholders why we think it's a good deal for, on our side and also on the Piedmont side. And to date, the feedback we've had has been overwhelmingly positive. So we're looking forward to that. But I think in summary, we expect that arbitrage will close up closer to completion in a similar way that the Arcadium and Rio Tinto, or Arcadium traded up close to completion.
Yeah, I hope so. Because I was I bought some more Arcadium as it fell. I think in late December, early January. But I am watching that closely. Yeah, the market doesn't seem to care too much. There's been a lot of noise around the election and the quarterly results around Pilbara, Minres, Liontown, and IGO have now reported this week. So and the Lunar New Year, Australians kind of get it back. Like I don't think a lot of people have yet been paying too much attention to lithium, but it's great to have you on and have this update. So like what I guess just what's in store over the next couple of months to ensure a smooth integration with Piedmont? I mean, have you been in touch with Tesla, and their hydroxide plant, LG Chem, Piedmont's offtake partners, and the Carolina project, is something that they've advanced? Like, how do you just maintain that? Because you are the surviving entity. If you can comment on those things, that would be great.
Yeah, actually, Howard, I was just in the States last couple of weeks. I was down in Belmont, North Carolina, with Keith and the team. So we spent a couple of days really sort of going through and getting us up to speed. Obviously, we've done our due diligence, but it's really that sort of next integration planning. We've also kicked that off with a number of work streams. So there's sort of 13 work streams that we've got, ranging everything from finance to people through to permitting and project ranking and so forth. So that work's already underway. So we really want to be able to hit the ground running at completion. So that work's progressing nicely, which is great. And I think one of the benefits that we've got is that we've had established relationships. So been able to work with Keith and the team. They're all sort of known entities. We're known entities to the team as well. And so it's very much now about pulling it all together and really being able to hit the ground running at completion. And as I said, with the integration planning that's already kicked off, we're in a nice space. And we've been updates on Ewoyaa, North Carolina. Obviously, people already know where NAL's at, and they're obviously interested on the Moblan side of things. So, we're in pretty good shape, and we're obviously very excited about being able to consummate the deal and get on with it.
Great. In relation to the sequencing, and if you could talk about Atlantic a bit, because I think Sylvain, who has done a fantastic job at the operations at NAL, I think has some history in West Africa. So, and Keith Muller at Atlantic is a very solid guy as well. So if you could just talk about that and how do you, in terms of sequencing, is a brownfield expansion at NAL, versus Atlantic. I think those would be the first two before Moblan and Carolina, but help us think through that too.
Yeah, I think as we work through it, Howard, so I think the first piece, you're absolutely right, Sylvain, and actually a number of the folks at NAL had worked in West Africa, so that they've got that African experience, which I think will be valuable in terms of what we'll bring to the JV and Ewoyaa with Atlantic Lithium. We've been in contact with Keith and Neil from Atlantic as well. So that's all taking shape. I think just on Ewoyaa, obviously there was a change of government at the election last year. So that new government's been formed. There's obviously a bit of reorganisation as it relates to the bureaucracy and so forth. And then ratification of the mining leases is still pending. I think on top of that, one of the things that we need to work through as part of the integration planning and in conjunction with Atlantic is what does the development timeframe look like and so on. I think our initial observation would be of the projects and expansion projects we've got or development projects we've got in the portfolio, Ewoyaa is probably the nearer term or most shovel-ready project subject to ratification and then being able to fund it. But I think fundamentally it'll require somewhat of a price recovery before we'd be hitting the button on that. Following that, obviously NAL pretty close on the heels in terms of an opportunity to be able to, from a brownfield expansion, and Moblan a little longer dated simply because of the permitting required for a greenfield project. So I think the batting order's starting to take shape, but it's going to, obviously I don't want to front run the MergeCo board. So there's plenty of work going on with management at the moment about getting that really sort of nutted out, and then we'll get that in front of the MergeCo board upon completion. So I think, really what I want to be able to share with investors is we're certainly putting lots of thought and work into that now, and they'll expect us to be able to come out pretty clearly right after the merger and give people a very clear, or merger completion, give people a very clear view of how we're going to go about it.
Okay. Just on Atlantic, you're reminding me that, they did just have a change of election. We're still waiting for ratification, but assuming they get ratification, who knows how fast things move, but like a decision to move forward on Ewoyaa, is that a joint decision, or is that something that like once they're ready to go because they had their offtake, process in place, how does that decision making work? And if they want to move forward, do you have enough cash, to fund the commitments that Piedmont has with Atlantic, assuming the merger goes through?
Yeah, Howard, that's probably still an area that we've got to wrestle the ground with Atlantic in just terms of what that sequence looks like. I think what both parties are recognising is that it'll be difficult to push the project forward at current pricing. Now, clearly, we expect that there will be a price recovery. The question is how much of a price movement or price signal do we need to be able to sort of push it to a final investment decision? And then I think at that point, the obligations as Piedmont have got would roll in. So there's a bit of water to go under the bridge, Howard, before we get there, and some more work for us to do with Keith Muller and the Atlantic team to really sort of understand how they're thinking about it as well. So preliminary discussions, I think, pretty good alignment to date, but we're going to need to sort of really thrash it out in a little more detail over the coming months.
Okay, that's great. You had mentioned doing a share consolidation. There was no, awards given to a number of shares outstanding for lithium companies, I think was a comment you made. So have you given any thought to the timing of that and, what the ratio might be?
Yeah, so there's a bit of work going on right now, Howard. I've actually got something in front of the board right now, so it wouldn't probably be appropriate for me to describe, but we certainly we think a consolidation makes sense. And then as that is applied to sort of the ADR ratio back in the States as well. So, I can think probably the short answer is watch this space, and I expect that we'll be covering that in our F4 submission to the SEC. So, investors will certainly, and when they get to vote on the deal, are certainly well aware of what we're thinking around consolidation.
Okay. Another thing is I mentioned your sell side analyst coverage for Sayona, but Piedmont has a very significant universe of additional sell side analysts. So as a part of the merger integration, have you been talking with the U.S. coverage of Piedmont?
Yeah, we sure have, Howard. So Andrew and I had spent some time with Keith, obviously just post the announcement, meeting with a number of investors and analysts, and then we've also continued that, and then obviously we'll be across back in North America first part of March as well. So that is one of the key areas, and we've made it very clear to the Piedmont investors that despite us being ASX primary domicile, they're going to see plenty of us there, and we're going to make sure that those folks are appropriately informed and that they're getting the necessary information. So we certainly don't expect to see any coverage drop off.
Okay, so Sayona shareholders could look forward to having many more analysts covering the stock. Yeah,
Howard, that's exactly what we want. And that was part of the strength that we saw as well as part of the merger. So I think obviously we're going to be a larger organisation. Keith's built up decent coverage in the US, and so we certainly want to be able to leverage that as we move forward.
Okay, and I'm going to remind our viewers that once upon a time in 2020, RCF, who is backstopping this offering or the merge co, I mean, the $69 million that they're putting in, I think is larger than the combined equity raises that you and Piedmont did. So they really were anchoring merge co, but it was a bit unusual that they made a contingent on the merger going through. But RCF in 2020, backstop the Pilbara acquisition of Altura, and that marked the bottom of the lithium market, and they did fantastically well on that investment. And hopefully, lightning will strike twice for RCF in this regard for all
and for the sector more broadly, Howard.
For all Sayona shareholders, and for the sector more broadly. You're a pure play spodumene producer, and the structure is much more simplified, especially the offtake agreement once MergeCo goes through. So, and higher cost producers generally are the most leveraged to rising prices of spodumene. That the commentary coming out of Pilbara and Minres that I listened to was cautiously, optimistic, and as Rodney mentioned, a 25% premium, on the CME for hydroxide, looks pretty good. Growth in China is very strong. I asked you didn't comment, any comments on like relationships with Tesla and LG Chem, if you've been in touch or visited, any Tesla just reported their results yesterday.
Howard, so the short answer is we're actually meeting with Tesla when we're out in the US in March. So we're actually heading down to catch up with those folks as well. And so, those relationships are certainly being formed. And again, we'll leverage the good work that Keith Phillips and the team have done at Piedmont to be able to maintain those. And then obviously LG Chem as well. So, work has commenced with that, Howard, in terms of supporting those relationships moving forward.
Okay, well, look forward to getting any updates if you could disclose that after that on their hydroxide plant in Texas, which toward the end of last year they tweeted about, had received their first spodumene but we don't know exactly, the progress. And Tesla, it wasn't a focus of the Tesla earnings call yesterday. It was mostly about humanoid robots and great optimism, out of Elon Musk. Anyhow, I'll be at PDAC in March. I expect you'll be there, and look forward to catching up with you and Andrew and the team. I don't have any more questions. I think this covers it. Thanks, Lucas. Unless there's any final things you want to say, we can, wish you a happy weekend. And anyhow, any final thoughts, Lucas?
No, just as always, Howard and Rodney, great to spend some time with you. And we love being able to sort of provide our investors and the broader market an update in terms of how things are travelling and what our forward plans are. So again, we're very optimistic about what we're going to be able to do with MergeCo, and we're going to have a great balance sheet and a wonderful set of development opportunities in front of us, in addition to being in a position of being an incumbent producer and perfectly positioned. So when the market does turn, that, as you described, will be nicely leveraged to a price recovery. So certainly looking forward to the next few months and getting the deal done.
Forgive me, I noticed I wrote a question here, which I forgot to ask, and that was about the Canadian election. We had a big election in America, but you talk about permitting timelines, for Moblan, et cetera. That has been a consideration on how long things take, but it looks very much likely that the Conservatives are going to win in Canada. I don't know how much you follow this, but any comments on the political dynamic of, U.S., Canada, maybe U.S. acquires Canada. We'll see.
It's a touchy subject with my team at NAL, Howard, I can tell you that.
But on the Canadian, if it goes Conservative in Canada, do you think it could have positive implications or negative implications? Like how relative to the energy transition? Because Pierre, seems very fossil fuel focused, as well as, Trump, but just curious what you and your team are thinking in relation to that, how it could impact.
Yeah, Howard, in discussions with Sylvain, and obviously, look, I'm following it closely, but, nothing like the folks on the ground and sort of a sense for it. The prevailing view from the team is that if the Conservatives are to take government, there's been discussions and that they are quite pro-resources, and I think that's across the board around transition minerals, as well as conventional and fossil fuels. So I think there is an optimism that there might be some reform in that space, but I think ultimately, we're not banking on that. The things we've got to work on is the stuff we can control. So getting those baseline studies and getting all the environmental work done so that we can move forward on that. But clearly, any streamlining of green tape that's done in a responsible and sustainable manner, we'd certainly be supportive of, particularly if it gets projects into production a little earlier and with less cost.
Okay, it's good advice. Focus on what you can control and don't focus on what you can't control. I have to remind myself every day of that as I'm getting, whiplash with all the news flow coming out of, Washington and AI and et cetera. Okay, thanks a lot, Lucas. And we'll look forward to, the next update in a couple of months.
Great. Thanks, Howard. Thanks, Rodney.